Afternoon. Base metal prices have been in a midst of confusion amongst the G20 summit, which was surrounding the complex over the last couple of weeks, and the trade tariff development, which has been putting the prices under pressure over the last couple of months or so. So we've seen that most of the bad news for the base metal complex have largely been factored in, and a select few metals are trading with strong fundamentals, but that is not actually reflecting on the prices. Now that we have some kind of clarity after the G20 meeting, where both the larger players have agreed on a 90-day cool-off period until when the trade tariff will not be increased from the 10% slab to the 25% slab. And if there is any kind of conclusion that comes into this period, then it's fine. But otherwise, if not, then the tariff is of 200 billion from the US to China is likely to increase to 25%, and that could be another detrimental thing for the base metal complex. But however, we expect that until then the base metal complex is likely to be very supportive. That is reflecting on the prices today, where most of the base metals are trading with a positive bias. We would focus largely on two select metals: copper, which has been under pressure for the last so many weeks. We've seen inventories draw down very sharply for the LME as well as Shanghai. Cash to 3-month trading in a very narrow backwardation, which is indicating spot tightness, and cancel warrants also increasing sharply. That in a way is kind of positive for the metals, but has not been reflecting on the prices. So after this development, we expect that copper could be the best bet for the short to medium term. Any level on the LME towards 6050, 6100 is a good level to buy, which targets about 6550 on the upside on the LME. On the domestic front, we can expect that 430, 435 could be a good range to buy. Expectation of about 455 and 462 levels in the coming days. Nickel also have been hammered very sharply on the back of 20% fall in stainless steel prices. But it looks like the fall is likely or largely overdone, and there could be some respite to prices. So nickel could be a good level to accumulate from here on at around 770, 775 levels, targeting 820, 825 on the upside, as it is poised by strong fundamentals like sell-off or a fall in LME as well as Shanghai inventories, which are at multi-year lows, and some bit of tightness seen in the cash to 3 month spread, which is a